Back to Market Fatafat, and let's keep it going with all the buzzing counters in trade right now. We have Junai with us on the research side. And Junai, let's talk about Trent, because this counter has been one of the outperformers in the whole space. And today, Morgan Stanley note also came in. Tell us more on that front.
Well, yes, Morgan Stanley came up with a report on Trent. They have maintained the equal weight guidance rating, but have hiked the target price to rupees 4,817 per share versus the earlier guidance rating of rupees 3,675 per share. Now the the brokerage says that the company is in early round of its growth and the growth potential is immense ahead. They believe that the company is well placed to navigate the next phase of the growth by leveraging the platform and growth engines. They also believe that the return ratios have seen at record levels due to better profitability and improvement in asset turns. The stock is clearly buzzing around 1.5% today.
Alright, Junai, but before we get to our technical analysts, let's mount the flashes at the bottom of the screen. Some respite coming in from the sweltering heat, conditions favorable for monsoon onset over Kerala in the next 24 hours. So monsoons are on time, Shrishti. That's the news coming in from IMD. In fact, IMD had also predicted that, in Mumbai, we are expecting the rains to hit any time between 10th to 11th of June. So far, the IMD has been telling us that the monsoons are on time and we are expecting normal to above normal monsoons this year. So here's hoping that, the monsoons hit us soon so that we get some respite from the scorching heat that the whole of India has been reeling under. But Dhwani Patel, who's the founder of Finversify, is joining us on the technical side. Hi Dhwani. Dhwani, tell us, you have picked out Moscow docks for us. Now this counter has seen no stopping. In fact, every time one looks at the Moscow dock and you feel that it has reached an upside, it moves up yet again. So tell us, what are you seeing on this counter? Is there more steam left for this?
So it's not going to disappoint you again when we are thinking that it's yet done with the move, but still it's got more steam left in it and we are waiting for the next up move in this particular counter. What is interesting is that the volumes have picked up in this particular counter since the breakout that it has given about 2530 levels, and since then there is no stopping over here. From current levels also, it's time for fresh entries for the ones who have missed out. On the lower side, 2980 should hold out as a good stop loss for this particular counter. On the higher side, the targets remain open. According to the trend analysis over here, the next target that we are getting on this particular counter from the current levels is of 3500 and then 3650.
Alright then, that's about Moscow dock. But moving on, let's shift focus to MTR Technologies, because this counter is one of the result candidates, and what we are seeing is that this time the company has actually missed to a lot of the guidance numbers that the company gave in the past, and hence the cut of 11.5% is what we are seeing right now. Onto the revenue front, in Q4, the revenue is down about 27%, net profit declined 84%, and the margins actually squeezed to 12.7%. But also onto the FY24 guidance, the company did come out with a guidance of 610 crores, but they have just reported 581 crores, and they also missed on the EBITDA margin guidance, because for the full year that comes out to be a 19.4%, but they have actually guided for 24% earlier. So miss across the board coming in for MTR Technologies. And not just that, the management attributed the lower than estimated EBITDA in the financial year due to deferments of the order in the clean energy segment and delay in the execution of the projects in the space vertical. However, they are expecting significant orders as it has concluded discussion with some of their major MNCs within the aerospace. But for now, for today, we are seeing a cut of 11.5% in MTR Technologies.
Alright, yet another earnings candidate. Insecticides India is in focus today on the back of a poor set of results that the company has posted. In fact, the stock is trading with cuts of over 5% right now. Let's look at the results then. The revenue did see a sharp downtick of 23% on a sequential basis at 273 crores. The PAT also saw a cut of 36% on a quarter-on-quarter basis, coming in at 8 crores versus 12 crores in the previous quarter. The EBITDA also saw a decline of 65% on a sequential basis at 9 crores versus 26 crores, and the margins also saw a decline of 398 basis points on a quarter-on-quarter basis at 3.3% versus 7.3%. Those post set of results coming in for Insecticides India, and we can see the impact on the stock movement, stock trading with cuts of over 5%.
Alright then, moving on, and let's talk about another stock that is in focus, and that is Hindalco. Janai, take us through what's happening with Hindalco, one of the top gainers in Nifty 50 today.
On the back of Novelis, the subsidiary Novelis has announced its price band for the IPO, and the price band stands at $18 to $21 per share. The company is coming out with an OFS of around 45 million shares. The company has also kept a green shoe option of additional 6.75 shares if in case there is an oversubscription of the IPO. Post IPO, the Hindalco stake in Novelis will stand at 92.5%. And if we talk about on valuations front, analysts believe that the Novelis arm valuation is around 6.5 to 7 times of FY 2026 EBITDA, and if you look at the stock is clearly buzzing around 3.5% in today's trading session.
Alright, Dhwani, coming to you, you have also picked out Hindalco for us. Now, the metal pack has done quite well for a while. In fact, Hindalco has given some gains of 36% in the last 6 months. Tell us, what are you seeing for this counter? What is the upside to the stock?
Absolutely. Talking about Hindalco, why it is on the technical radar also is that in the current week, what we are seeing as a price movement coming in Hindalco, it's given a breakout above its previous swing highs on the weekly chart, which were made in March 2022, and we are seeing a breakout coming in from current levels. Definitely, Hindalco is on the buy side. Weekly also suggests that the volumes are picking up. Even the momentum index of ADX is on the rising side, giving a move above 31 levels. So momentum buy is suggested in this particular counter. From current levels, one can go long into Hindalco, given a stop loss on the lower side at 680, and on the higher side, the target for this particular counter is of 750.
Then that's about Hindalco, but let's talk about Power Mech. This is one of the counters that is in the news flow today, as the company has secured its first construction project in the critical nuclear power sector, and they have received an award, that's a significant one for them, of 563 crore rupees from BHEL. Now, the company has secured its first ever construction project in the critical nuclear power sector, and that's the update coming in from Power Mech. The stock is also holding on to the gains of 2% right now.
Alright, Dhwani, Trent is what you have picked out. Like Shrishti had mentioned earlier, Trent, this counter is also buzzing away, has been buzzing away for a while. Tell us, what are you seeing on the charts for this one?
Trent has been always in the news for quite some time for its bullish trend that it is maintaining since the breakout, and the bullish trend is here to stay. We've constantly been seeing an upward rise, and the formation of a higher high and a higher low continues in this particular counter. On the daily charts, definitely we are seeing some stagnant movement in it at the lower levels at 4500, which is forming a base. So 4500 is a good base for this particular counter. On the higher side, I'm looking up at 5030 as a target on this one, and the stop loss, as I said, on the lower side that has to be maintained is of 4500.
Alright, that's about Trent on the technical front, but with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. But Shrishti, let's quickly mark the markets. If you look at Nifty, there is a decline coming in there, post 150. In fact, we can see the Nifty is inching towards the day's lowest point, which was at 22,714. Currently, Nifty is sitting at 22,749. That is where trading with cuts of 0.6%, more than 0.5% cut coming in on Nifty. So that's where Nifty is sitting at, and Sensex also trading with cuts of 530 points, currently down 0.7%. Nifty Bank also currently at 48,549, trading with cuts of 1.2%. So sea of red is what we are seeing on the markets today, and that's where the markets are at right now. But we'll move on and take the next stock that is in focus today, and that is NBCC. NBCC, an earnings candidate, also reported its quarter numbers. If you look at the numbers, the revenues did see an uptick of 43% on a year-on-year basis at 4,025 crores. The net profit also increased at 24% on a year-on-year basis at 141 crores versus 114 crores in the previous year. The margins also saw an expansion of 234 basis points on a year-on-year basis at 6%, and the EBITDA also saw an uptick of 133% on a year-on-year basis. And we can see the moves coming on the stock as well. Currently, NVCC is trading with gains of over 2.5%.
Alright, then moving on to the next counter, and Junai, take us through the earnings of Dreamfolks then.
A poor set of number versus expectations. The revenue stood at 281 crores versus 238 crores, seeing an uptick of around 18%, but the net profit was down around 28%, coming in at 18 crores versus 25 crores year-on-year basis. If we talk about operating performance, then EBITDA saw a downtick of about 29.4%, which came at 24 crores versus 34 crores, and the EBITDA margins also saw a decline, which stood at 8.5% versus 14.3% on year-on-year basis. The company said that the higher cost of service is which dragged the operational profits and the margins. The management was earlier on 80 Now where they told that the company is focusing on expanding in Southeast Asian market, and they are eyeing about 5 to 10% revenue growth from these markets over the next 2 to 3 years. The company is also foraying into new segment of F&B and lifestyle services. So this is a company you need to keep an eye on, and the stock is around seeing a downtick of around 3.3%.
Then that's about Dreamfolks, but Dhwani, take us through what's happening with Dixon Tech amidst this market. The stock is also holding strong with a gains of 1.6%. What are the next stocks?
Absolutely. The stock is holding up in today's day where the market is making some profit taking over here. The stock is seeing buying action coming in over here. The stock has been maintaining a higher high and a higher low trajectory since the momentum started from 6,400 levels, and since then the stock has also been holding on a daily chart as 20 period exponential moving average as a support level for it. Currently also where we are trading is closer to the same levels. It's a buying opportunity from the current levels. We also see that the previous swing lows that were made over here on the lower side of 73.50 levels. Since then, we have seen an upward tick. Almost 100% of the same has been achieved, but still there is more fuel left into it from current levels. Also, one can go long into this particular counter, keeping a stop loss on the lower side at 8990. On the higher side, positionally the target for next 2 to 3 weeks comes up at 9870.
Alright, we also caught up with the management with Hina Nagarajan, who's the MD and CEO of Diageo India, where she told us that they will meet the double-digit margin growth with pricing mix for the company, and she also shares the growth outlook and expansion plans for the company. Let's go across and listen in.
So, let me talk the longer term demand scenario, right? I think if you look at the macroeconomics, if you look at the level of affluence, if you look at the fact that, you'll have 175 million households in mid to upper income over the next 5 years. If you look at the demographics of our population, right? So, India will produce 25% of the legal drinking age population over the next 5 years, right? Combine that with relatively low penetrations, 30% versus a country like US, which is 60-70. Per capita consumption, which is 2.4 liters versus the US at 7.2. I think the industry will grow, right? And we are confident in the growth of the industry. Also, I think we are so important to the government exchequer in terms of our revenue that, I think we will be supported, right? In whichever ways, despite the regulatory, impacts on pricing. So we are optimistic, and our portfolio, we have, as you know, fantastic global brands, Johnnie Walker, Singleton, Talisker. We have great local jewels, McDowell's, Royal Challenge. We are innovating, Royal Challenge, American Pride. We've got Godawan, right? So we think we have a fantastic portfolio that will cater to the consumer across the price ladder. And we have a very future-back approach. So we will continue to innovate to meet their needs. Repertoire drinking, we've got Hapusha, we've got, Tanqueray Gin, we've now got Don Julio tequila into the country. So we are very optimistic. We think our strategy is working. Shorter term, there is a moderation in growth and there is inflationary impact. Versus previous years, I think inflation on a number of the raw materials has cooled off. So glass, which is one of our biggest, glass is now stable and we expect it to be stable. ENA, we still expect to be inflationary, but we have a huge productivity muscle, and using pricing, mix and productivity, we feel that, we will be able to, deliver our guideline of both double-digit top-line growth and mid to high-teen margins.
Also speaking about the premiumization trend that's been holding strong in several sectors and in this sector as well, can you give us some indication of what kind of a growth is it going to really unleash for the sector going forward, and of course the entry level segment?
Look, I think there is an opportunity for premiumization across the ladder, right? So even if you look at the lower sector, you've got, country liquor and popular, which upgrade to lower prestige, and then the upgrade happens to the other segments in prestige. And for the last few years, if you look at between, say, 2017 and 22, the upper end was growing more than 20%, the middle end was growing high teens, and the lower end was growing single digits, right? Now, while that has moderated in the short term, we know that this industry is very resilient. And the good news in our industry is that people do not downtrade. Right? What we see for our brands is they're not downtrading. What they're doing is they're managing the wallet by reducing the number of drinking occasions. So the moment the consumer comes out of this pressure, they will go back to their normal behavior. So we feel, again, pretty optimistic that we will continue to see this premiumization.
Alright, that was the management of Diageo India, but with this, let's get back to all the stock-specific action then and talk about Oil India, because this counter was in focus on the back of a brokerage note today where Kotak Securities has come out with a note where they have gone ahead and downgraded the rating of this particular counter from to a sell rating now from a reduced rating earlier, but they have hiked the target price by 25 rupees. At 500 rupees is the new target price set by Kotak Securities, but that's substantially lower than the current market price. What they are saying is that there's too much optimism that is built in for the stock right now. Q4 was ahead on the higher crude realization, higher other income, but the production guidance remains strong. With a sharp run-up, they believe that the production upside is also priced in, and on the back of this brokerage note, Oil India is in focus, as well as the stock was also down on trade, is now trading with a cuts of 2.5%.
All right, the other stock in focus is Brigade Enterprises that reported its Q4 numbers. Now let's look at the numbers then. We did see, an uptick of 234% on the net profit on a year-on-year basis at 211 crores versus 63 crores. The revenue also saw a sharp uptick of 102% on a year-on-year basis at 1,702 crores. The margins also expanded 145 basis points on a year-on-year basis at 25.4%, and the EBITDA also saw an expansion of 114% on a year-on-year basis at 433 crores. The company has also recommended a final dividend of 2 rupees per equity share. Good set of numbers coming in for Brigade Enterprises, and we can see the stock trading with gains of 1.5% as of now.
Alright, then that's about Brigade Enterprise. But Dhwani, let's talk about your stock, and that is Campus Activewear that you are tracking. Take us through how is this looking on the technical front.
Today's discussion would be incomplete if we don't talk about Campus today, given that amongst Nifty 500, it's a top gainer over here. The question arises for everyone over here at this point in time, is it a good buy at this particular level as well or not? Absolutely yes, Campus is a good buy at this current level as well. What we are seeing in today's trade is that stock had already given a reversal over here, forming a bottom around 210 to 215 levels. Since then, we have seen a higher high, higher low formation coming in over here. From current level also, one can positionally go long into this particular counter for a target on the higher side at 340. On the lower side, the stop loss that one needs to maintain over here is of 275, which gives a risk reward of almost 1:3.5.
Right, another earnings candidate today that has posted a rather poor set of results is Finotex Chemicals, which is trading with cuts of 3% and has sustained those losses since morning. Let's look at the numbers then. We did see a decline of 7% on a sequential basis on the net profit for the company. We also saw the revenues come in at 10%, that is at 153 crores versus 138 crores on a quarter-on-quarter basis. The EBITDA was also down 5% on a sequential basis, and the margins also saw a decline of 413 basis points on a quarter-on-quarter basis. So poor set of results coming in for Finotex Cables, and on the back of that, the stock is in focus, trading with cuts of over 3%.
Alright then, let's talk about Tata Steel as well, because this is one of the earnings candidate, and this time we are expecting that the Europe EBITDA per ton loss is expected to narrow sequentially, while the India operations is expected to be impacted by the lower realizations, higher coking coal consumption cost as well. But in terms of the earnings, we are expecting the profit figure of 991 crores and the margins expected to be slightly lower on a quarter-on-quarter basis at 10.8% is what we are expecting, with a revenue figure of 57,521 crores. So Tata Steel, all eyes on the numbers which will be reported post market hours for today.
Right, Dhwani, coming to you, Gland Pharma is the stock that you have picked out. Now, Gland Pharma is the top sectoral gainer for a pharma pack. It's trading with gains of almost 2%, but in the last 6 months, it has hardly given any gains, like just 4% of gains in the last 6 months. Tell us, what are you seeing on the charts for this one?
Absolutely. The reason that you cited is the same reason why I am having this one on the technical radar. Reason being that the pharma pack is seeing some buying, and Gland Pharma being the top gainer over here. The chartical structure also gets interesting, as the stock had formed a bottom over here on the lower side at 1670 levels, from where we are seeing a support coming in, and the recent buy action that we are seeing around 1800 level is the same place where the stock is also crossed above its important EMAs. From the current level also, there is a buy opportunity in this particular counter, keeping a stop loss on the lower side at 1790. On the higher side, the target for this one is 2000. Post 2000, we'll see further buying momentum continuing in this particular counter till 2070.
With that, we are completely out of time on this edition of Market Fatafat. Dhwani, Amar, Janay, thank you so much for joining us. Shrishti and I will take your leave. We're completely out of time on this edition of Market Fatafat. Thank you so much for tuning in. Closing trades will take the action ahead.